Good morning, traders. It is Tuesday, the 7th of October, 2014, 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. So always, let's look at the overnight and what it brought in overnight for us here in the U.S., of course. German August industrial production misses by far, negative 4.0 month on month, consensus negative 1.5. And so this gives us a negative 2.8% year on year industrial production. Consensus is negative 0.5. So this is a big miss. Again, this is a stream of misses by Germany, the most significant economy in Europe. The German economic minister says the industry is going through a weak phase exacerbated by holiday effects, expects weak production for Q3. By the way, this industrial production number is the lowest since 2009, the lowest since 2009 in Germany. If you trade the European markets, you saw the weakness that this caused. German numbers causing Eurozone equities to trade lower on recession fears. Apart from that, Swiss September CPI misses, comes in at 0.1%, month on month versus 0.2 expected. Overall, negative 0.1% year on year on CPI in Switzerland, slightly deflationary there. Fed's George, a non-voting hawk, says inflation not currently a risk, but must stay vigilant, should hike sooner rather than later. The Reserve Bank of Australia left rates unchanged as expected, repeated that most prudent course is likely to be a period of rate stability. Japan's Prime Minister Abe says weak yen is hurting small companies. The Bank of Japan came out with a policy to maintain as expected. Bank of Japan's Kuroda to Parliament says exports lacking momentum. A weak yen generally good for the economy if it reflects fundamentals, but can hit some sectors, ready to adjust policy if needed. So those are the key items driving, potentially driving the trade overnight. Looking at the calendar ahead, 9 o'clock today Central, we have JOLTS, U.S. JOLTS job openings expecting 4,700. Also at 9 o'clock, we're expecting IBD tip economic optimism. The expectation for that is 45.1. At 2 o'clock Central, U.S. consumer credit expecting 20 billion. And then after the close, we get the API energy numbers, crude, Cushing, gasoline, and distillate inventories. Speakers today, we just got some comments from ECB's Costa at a conference on auditing and governance. Costa is a soft dove. At 12:30 today, we have Fed's Kosher Lakota, who's a voting dove, speaks on monetary policy in South Dakota. At 1 o'clock, just a half hour after that, Fed's Kosher Lakota will speak again in South Dakota about an undisclosed topic, I guess. And then at 2 o'clock Central, we have Fed's Dudley, who is a voting dove, speaks in Troy, New York on the economy as well. And then at 3:30 Central, 15 minutes after the pit, New York Fed Vice President Potter speaks in New York as well. As far as auctions, T-bill auction at 10:30, 4-week T-bill auction at 10:30. I don't have the amount. It has not been indicated yet by the U.S. Treasury. At noon, we have a $27 billion 3-year note auction. That's at noon, $27 billion 3-year note auction. Those are the key fundamental factors of the session. Let's look at the technical side, where price and volume rule. So yesterday, what have we done? So yesterday we opened out of range as expected. The market tested the overnight high. The overnight high was 70.50. So overall, if you go back and look at the If you go back and look at the trader bite from yesterday, the expectation was for a push to the overnight high on the open, potentially pushing to 72.25, which is a key key resistance area. It didn't quite get there. It pushed to 71. It took out the overnight high by 2 ticks. So it went above the expected level, test level, by 2 ticks, which is pretty good. But the general expectation from yesterday's primary hypothesis or key trade plan was a test of 65.25. Right here, this naked point of control from the 30th of September. And then the next expectation was if it pushes through 64.50, then we're expecting a test of 1960, and that would pretty much end the primary hypothesis. The ensuing action was expected to be choppy with a downward skew down to the 58.5 area. That's basically what I went over in yesterday's trader bite. What it actually did is push to 71, 2 ticks above the overnight high, test 65. It bounced once it tests 65. It bounced back up, tested the opening swing low at 67.25, which was also the mid and VWAP at that point, and then it broke through the into the Friday range, went right to value high of Friday, bounced back up to mid again, and then sellers came in strong down into the 60. It ended up dropping down to 59.25, pushing through the 60 by 3 ticks. Chopped around in there as expected, but then we had a second strong push lower, which was a lot more than I expected, but still, we're trading the Friday's value area, and then the market ended up pushing down to 50.50. 50.50 represents a high volume node. It also coincides with the 38% retracement from the low. 50% is 44.75. So if we take the low of 18-quarter day session only to 71, the 38% pullback, I know a lot of people watch that, is 50.75. I don't trigger off of fibs, but my interest in fibs is the 50% pullback, just like I look at mids for the session. Now, here's what's interesting. If you take that same fib from 18-quarter to 71 and look for where the midpoint is on that fib, it comes out to 44.75. The overnight low is for the session is 44.75. 44.75 puts us in into a weak area when you look at this this immediate zone here. So if I put a profile around this, you'll see here that 44.75 45 area represents a very key low volume node here where the overnight low is. It shows buyers stepped in. This is where buyers stepped in on Friday after testing down to 45.5. It left a small gap zone. We still have a gap down to 38.50, 39 with a point of control around 39. That whole area is expected to be tested if this rotation down continues. I expect it to come back down into this 38 area. So what do we have in store for today? Let's take a quick look at what the overnight session did. Here we are. We opened, we closed yesterday at 56. We opened just a tick below and pushed straight down. We managed to climb back up to 56.25. And then we had a big drop on the German number. The German number caused this quick drop down. We have a weak low, double bottom at 44.75, but the market managed to find some buyers and push through the mid. So it causes this action here, the fact that it pushed through here at 7 o'clock Central Time, it causes some doubt. The initial expectation when I looked at this last night was a pullback into the 50-51 area, and then I expected lower lows into the session back into that 1940 area that I was just talking about. So to me, I see some pretty good reasons for the market to pull back, to seek buyers back down into the 44-45 area. I expect that to fail. I expect it to fall back through the 44-45 area because of this LVN, and I expect it to find a base again from which to rise at 40-38.50. This is what I was looking for as my primary trade plan for today. Again, 44.75 represents this high volume node on the composite. We played this high volume node back here, if you recall, on this day. And it's the overnight low. It's the midpoint of this last swing. There's a lot going on down there, but price is hanging out with 56.25 being the overnight high. So coming into this, we are basically in the middle of the range on the overnight, on the edge of yesterday's range. The expectation is more, unfortunately, where it's opening right now, it forces me into a stance of watching what it'll do, before taking any bias with those who are in control. So, but I feel like it's not quite a 50-50 chance. I feel like it's a 55-45, maybe 60-40 to the sell side. I'm looking for continuation lower. The point of control is lower yesterday. If you look at the way value has moved, so if we look at the point of control movement as an indication of value, here's a nice little bounce, and then it just, the point of control, these red lines, down, 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 but stabilizing after a big test lower. The market stabilizes and finishes the point of control, which is inside of the prior day's value. Then we have this big gap up, and the market tests to the 45.25 and finishes with the point of control at the high. So we expect continuation. We get continuation the next day, which is yesterday, but yesterday opened higher and moved the point of control, even though it's in value, moved the point of control down and finished below it. I expect continuation lower in this circumstance, but given the location of where we're opening, it creates a conflict, so to speak, as to what to expect early on. The ideal situation is that hypo one, or the primary trade idea for the day, given the context, is something that plays out fairly quickly, probably within the initial balance or the first hour of trading, and you're done. That's the ideal situation. But with this opening where it is, right on the edge of yesterday's range, just below the value area, with what's below it, I feel like early on we're likely to see, since inventory short overnight, we're likely to see a responsive attempt higher, but I don't expect it to be very strong. If it does come in and it's strong, which is my hypo 2, if it does come in and it's strong, then we're looking for 63.75, 64 to be tested, and then for it to try to push out of yesterday's range. We still have a weak high at 71. We still have 72.25 exposed, but that's 22 points away on an up day, which is unusual. The usual range for an up day or an IB high break is 15.5 points. So overall, I expect responsive buyers to step in. I expect them to fail. I expect it to roll over. It's starting to roll over now. Unfortunately, it's taken away the trade. So let's look at the overnight. See that? It's rolling over already. I expect it to roll over, and I expect it to explore 44.75. I expect that to go. There's a lot of confluence there. I expect that to be tested, and the overnight stat to be satisfied with a low break, and then I expect it to go through this thin area between 47 and probably down to 42, and I expect it to test 40 down below. The target below, the key target below being 38.50.39 for today. That's the primary trade idea. If I'm wrong on the read on the open and it finds responsive buyers and it pushes up over the overnight high, then I expect it to pull back, push into 58, and then start to move towards 63, 64 on the session. I find that to be a lower probability play. I do expect the day to be a continuation of yesterday lower. We had a nice impulsive move here on this entire range from yesterday, from 71 to 50.50. We had a pullback to about the mid, and then the market closed. We never had the continuation move, and I expect that continuation move to come in today, the extension move. Okay, that's my primary hypo for the day. I gave you the targets. I gave you why. The rest is up to you. Quick comment. It's 8:17, just 3 minutes. A quick comment. I got a question yesterday, which was interesting. A person asking me how how routine am I about what I do once the trade is done. How routine am I about approaching a trade sequence? Is that the holy grail? Is that the secret to professional trading? It's in the habits, kind of like a fighter pilot when they get into the cockpit. They have certain things they do almost automatically, just like when you get into your car, you check your mirrors or whatever. And that's a great question, but it's something that I actually gave talks about on Big Mike Trading and several other partner outlets. Your routine and habits are so important. So one of the things you might want to consider doing here, it's Tuesday, you might want to do this over the next couple of days, is become conscious and aware of what your routine is. What is your routine? When you are just, there are things that we do subconsciously and we don't think about them in a linear way. We don't use our left brain to process them because they've been submitted to our subconscious mind. But it's important for you to recognize, to start really recognizing what it is you do. Once you close a trade, win or lose, what is your habit? What is your habit? Is your habit to immediately look for reasons to go the other way if it's a loser? Or is your habit more to document what was there, to look at what was there, to try to figure out, is it your stop being too tight, or has the market context changed, or whatever? It's very important to kind of have a conscious, deliberate habit that you repeat, and just repeat it enough times that it becomes subconscious. Keep a matrix in front of you, a sheet, a journal, and just jot down the trades, or jot down what happened, jot down how you felt. Whatever you feel is important. A lot of those things are very important to look at. I use Evernote. To journal. I know a lot of you do. It's free, and it's something that you can later search. If I'm looking for a word like angry or frustrating, I can go and do a search and see how many times it showed up and what kind of a day it was. It gives me an idea of patterns that my mind is not able to track when I'm in the state of engagement with the market. It's just really, your habits are incredibly important. That's one of the things that you get when you're a prop trader, that you have to kind of bring into the fold, or bring into your toolbox, that many online traders don't have to, since they're doing this at home a lot of the time. When you're a prop trader, you start to learn that the better traders, the guys sitting in the same row as you or in the next row, are very deliberate and systematic about how they approach the market, not how they trade. The other question I got that was really interesting is, I guess this person named Tucker, has been tracking my Hypo 1 performance. Not that I'm interested in that track record or anything, but the question, he says, in your 7 out of 7 sessions that Hypo 1 worked out within the first part of the session, 7 out of 7. I remember the day that I missed, because it's really interesting. I missed the read on this day here. So that was the 24th. Since the 24th, each one of these days, my hypo one played out as expected at the levels they were expected, many of them within 2 to 3 ticks. That's not a pat on my back, but the idea is, the question is this a system that you're using? Are you generating signals from which you get your hypos? And this is not a system. What I'm doing is systematic in nature, but this is not a system. I'm not trading an algorithmic signal to come up with these hypos. Okay, I want to be clear about that. I'm not trading a system. I'm trading an auction, and I'm building my hypos based on how the market's behaving and the footprints it leaves behind. I'm like I'm less of a robotic trader. I'm more of like an Indian tracker. A hunter, just looking at footprints and looking at what the market has left behind and trying to predict the direction that the market's trying to take. And then I wait for the market to confirm that direction and then try to move with it. I don't try, I do move with it. And that's all it is. So please don't consider this a system of some kind. There is nothing systematic here. These charts are available to everybody through InvestorRT, linsoft.com. Everything I use is conventional, and my approach is very, very auction-based, and is just very systematic in the approach. And I've done homework webinars to show how that's done. So there is no system here. There is no holy grail. I don't have the answers when it comes to systematic type trading. I just want to make that clear for those of you who don't know me and are just listening to these Trader Bites. I appreciate your attention. Have a nice day, and good luck. Watch your risk.